Good morning, everyone. Hope you're well. Welcome to our live trading room for the start of the new week. It is the proptrade.com and we are live. It is 7:45 here in London and huge moves overnight. Although you can't really tell from the hourly DAX chart that's on my chart there in front of me. Remember, these are the Heiken Ashi candles, and the blue line is the 50 period EMA. Here it's the only it's the only a layout that's actually still working for me, thanks to the vagrancies of or some of the vagrancies we've had recently with trade lock. But anyway, never mind. It doesn't. It's not going to stop us from trading this morning. So the hourly chart is sort of sideways here on the DAX. If we look at the yen, which is absolutely rocketed, we've had a very weak yen. Sorry, not yen, the Nikkei. We've had a very weak yen, a huge move in the Nikkei and the yield and the stock and the bonds in Japan, and that's all to do with the confirmation of a very dovish, very pro. I mean, she reminds me of Margaret Thatcher in the UK back in the 80s and Ronald Reagan. It's that anti-establishment, let's free up the markets. So the likelihood of interfere or a rate hike from the Bank of Japan, which is what the markets were anticipating and hoping for, looks like that's not going to happen that much. Very much on the back burner, very much in the mold, I say, of Reaganomics and Thatcherite policies of the 80s, where everything was sold off that the government owned and stock markets ripped. We had the stock market bubbles. You had the deregulation in the United Kingdom of the banking sector and the US as well. And so anyway, new all-time highs for the Nikkei. If we have a quick look at the yen crosses, you can see they're very much under pressure this morning. JPY, I nearly typed in yen there. Is there anything else you want to have a look at, guys? Let me know. Dollar yen got within rallied to this hugely significant 150 level. Unfortunately, I haven't got the levels marked on it, but you see on the alley chart, massive gap on open. So whether you've had open positions on these, the stock markets in Japan or the yen or any of the other currencies, we're into a new paradigm with a new. I mean, she's only prime minister elect, but it wasn't a surprise that she won, but it was much. It was a bigger win than many had anticipated. So big rise for big fall for the yen, big rise for the stock markets, big fall for bond markets in Japan as well, and that's rippled out around the world. Obviously, the lockdown we've seen in the United States has really sort of hurt the dollar last week, but it's risen this morning on what's going on with the yen. So it's helped the dollar against some other currencies this morning, but we'll concentrate on the European ones into the open. We're still 15 minutes away from New York. We'll come back to the DAX in a minute and where we are on that. It's been chopping around a bit, unlike the Asian markets. China's closed this morning, and some of the many other Asian markets are also closed for a few days this week as well. So no reaction out of China as yet. But let's say if we just got to the Australian market as well. So it's the yen, isn't it? We've got how the Aussie yen will move because it's a big risk indicator. If we look at the ASX in Australia, and you see here little move. Oh, is that actually that's from? Oh no, that's this move. Little move there down in Australia. But if we go back to the forex markets, and look at the yen pairs, Aussie yen. Big risk indicator again. A big weakness in the yen, and we see this across all the yen pairs this morning. So Aussie yen over 99 from a close on Friday at 97.30. So huge percentage move. Euro yen 175.60 from Friday's close at 173. So big 200 pip moves to 300 pip moves at point euro. The guppy, the pound against the yen, we traded that last week, weren't we? We were at under 200 at 198.77 or 72 on close on Friday, and big spike through 200. 202 was breach as well. 202.25 is a big move this morning. So that looks still bid this morning. She obviously hasn't. She said in her winning of the nomination, winning of the party leadership. She's not yet prime minister, but she's won the dominant LPL party leadership in Japan. That she was looking forward to it and looking forward to change and all those things that you don't get in Japan. I mean, and the other hugely psychological and significant thing for Japanese politics and Japanese society is the fact that she's a female. That fact she's a woman is a very, I'm sure Japanese colleagues and friends won't mind me saying this, a very a male-dominated society still, particularly in business. And so for the glass ceiling to be blown by Ms. Takanori is really, really good news for inclusion, diversity, and everything else that's positive in the world in Japan. So pound yen. Big moves up. We'll see some recalibration of my platform, no doubt, my trading platform into end of day today. If these strong moves hold, I would say, with massive gap. If we just go up to the daily time frame, you see the gap on there as well. So it was trending higher anyway. The pound yen. The yen was remaining weaker after the rumours that they were they were cooling on the idea of trying to raise rates, but this is just anticipating its mood. Interesting, we're back under 202 as the European markets get going, but we're still very big, very weak dollar. Very weak yen this morning. We have a look at dollar yen 150, and it's still holding here. The daily chart still holding 150. Elsewhere, I'm sure you've been aware, those of you who've been trading over the weekend, we got a new all-time high for Bitcoin, over $125,000. I mean, had a strong last week. Last week is the daily chart. So we had a consolidation on Saturday, big spike yesterday, obviously on lower volumes. But we did get a new all-time high, 125,775 for Bitcoin. Yesterday in low volume weekend trading, but today, Monday, full Asian markets, I would say, except China and some of the other Asian markets. But the rumor about it's a combination really of the lockdown in America, perhaps counting this time. Every other time markets have shrugged off the government shutdown, but this time it could make a difference. So alternative assets like crypto and Bitcoin being the biggest of them all receives the significant benefit of that. So 124,000 Bitcoin trades out. As you can see here on the daily time frame, the big move was the 29th of September as we went over the 50-day moving average. That breakthrough 112,000 was key last week, and we've just continued into the Thursday, Friday consolidation over the weekend. New all-time highs here on yesterday, and 124,000 we trade at the moment. And finally, before we get back to the stock markets, 10 minutes to go to the open, we'll have a look at Mighty Gold, also racking through 3,900. So 3,300 is where we were consolidating towards the end of the summer, and we were just rippling around. Weren't we? Remember me saying, nothing was going on here, but these were positive downward channels. We was just going to waiting for something to happen, and as I say, if we zoom this in, there we are. You can see these trends here, but we were capped here at 3,400, and the breakthrough 3,400. Once we broke away from the 3,350 pivot area, do you remember saying how bored I was trying to trade gold during the summer? But the break came here, and off we've gone. We've all of this time, really, the 50 days kept us the right side. If we put some other indicators in, you can see it's a very strong local move. But through 3,700, through 3,800 last week, and this morning through 3,900 for a new all-time high for gold. So everything's bid. It can't go on forever. But as with everything, when you're a trend-following trader like I am, you follow the trend. You stay on track until something tells you otherwise. So 3,400, 3,950, I'm going to put in there as a dotted line. Is the next upside area, which we're in that zone now. So 3,950, big round number. So we breach that, and then it brings people I've already been talking about $4,000 for gold if the uncertainty continues. Obviously, improvements in the geopolitics of things, which doesn't seem to be happening. Certainly in between Russia and Ukraine, Russia continues to bomb Ukraine. much to the chagrin of Mr. Trump. But President Trump is concentrating on the peace deal he's trying to hammer out between Hamas and Israel. Hamas, surprisingly, many were saying over the weekend, accepted some of the points that Trump had put together, 20-point peace plan Trump had put together late last week. So things are moving quite quickly. Obviously, involves the return of the Israeli hostages, both the alive ones and the dead bodies, and also a return of lots of Hamas prisoners or Palestinian prisoners. But it's the poor, ordinary Palestinian people that have suffered hugely in this horrific war, and completely one-sided. But unfortunately, it's the way of the world at the moment, which is very right-wing dominated governments around the world wielding power, nationalist power, quite brutally. But there we go. So gold remains bid. The trend remains on. So don't fight. So let's have a look at what would be interesting this morning, which is the DAX normally into the open. Into the open on Monday morning to open the European trade. So here we are. This is the hourly chart. Sorry, the daily chart. So we were strong and long over the 50-day moving average here to close September out, having pivoted through and flirted with 23,400. So we were over 24,000 again through the 50-day moving average last week. I know it's strong. Tuesday, Wednesday, we were down Friday, and we are flat this morning at 24,380. So if we just come down, so the daily is still bid. If we put this, all of this we do beforehand, don't we? Just demonstrating what we should be doing. So this is our daily trend line, if you like, there, which is interestingly, it's not a great one. So we have lower time frames, and so let's go down the time frame. So if we go down to the 4-hour time frame. That's our daily trend line. If we just move it now, because we're going down, it's it's not a significant one really. What the 4-hour one would be there, and you see we'd have breached it on Friday. Sorry, try and move that up there. So that would have been sort of, in fact, it would have been there initially as it started to run. Now it's breached under so sort of consolidation and resistance there. And where is it? Well, it's 24,500. So if I just move that up. 24,500. That's where we're capped at the moment on Friday, Thursday, and last week. So that's a key resistance. Although it's not Friday's close, is it? It's that's a key resistance area for the rest of the week, really, on our 4-hour. So over the weekend, you'd looked at that. That's your daily 4-hour time frame has been breached. So we've moved down. The daily time frame has been breached as well. So let's just go down a step. So the hourly time frame so far, let's just do a quick reset of that. So the hourly time frame, again, if we just move this, obviously we didn't move these trend lines, we would have kept them up. Sorry, just get rid of it. So we had a strong close Thursday, Friday, as we said. So that's that's very steep, and that's the problem with that trend line. It's too steep. So we rallied significantly Thursday to begin the month to 24,500. As you can see there, that's our 24,500 level, and then we've come back down. So interestingly, there's our downtrend line here from Thursday, Friday into Friday's close, and then since then we've sort of just been going sideways. So as far as like today's concerned, to start the week, that's our upside resistance. The 50-hour really will be a key support this week. Horizontal round through there, 24,350. Let's say that on the hourly chart. Just put that in as well. So that's been our low from sort of the latter half of last week. So there's our channel for the DAX on the hourly time frame, and the 4-hour and the daily, because this is our high, isn't it? This 24,500. So see where we are. So there's our low today, and we're going in to test that low at the moment. So you'd say you would be biased down in the last couple of hours on the hourly chart. So let's go down, say the 15-minute time frame. So there's that down leg into these lows. And interestingly, over the last hour or so, the lows have been a bit higher. So again, if we don't put under a little trend line here, immediate 15-minute trend line for the opening European trades, we sort of tested. That's our 15-minute trend line. So on a 15-minute time frame, sorry, let's put that in there. Oh, this is supposed to be the ATR, isn't it? Let's just move this back to the ATR candles. Sorry, Heikin Ashi candles. Sorry, there we are. So it'd been long, then short, long, short, and then we're short again into this. So this is been short, and this would have been short here on this candle there, and they would have added here. I would have added short here on this big candle there as a 15-minute trader. So let's just go with literally a minute into the open. Let's see what happens into the opening trend. So again, this one would have, there you can see that's rallied along with our 15-minute time frame. So we're doing doji candle, and so the 5-minute Heikin Ashi trader using this strategy here would have been short from that level there. So we are short now on this 5-minute time frame here, and we are testing the lows potentially. So 24,381 would have been our entry position. I might have added there on that strong candle, but remember we're going into it, so I'm staying short. My stop loss would have been up here if we were trading into the open, and that would have been stopped out. See how the move has taken our stop out, because our stop would have been round about this high here, and it's immediately taken it out. So if I had it as tight as there or at the 50 period, it would have been taken out here on up. And that's, again, my friends, the risk of trading the opening trade. So that short trade that was looking really positive would have been taken out. However, remember this is our 15-minute trend line, and we go up to our hourly trend line. Sorry, our hourly time frame, and we're still okay. We're still above the 50-hour moving average, but you can see our low of the day is at the 50-hour moving average. So see if that holds here through open. So this is that level there. 43. So although we were taken out on the volatility of the open, which has disappeared now, interestingly, on our chart, because it's it's this one, wasn't it? That was our entry. So it was taking us out here. We are still short. So at the moment, I'd be happy to re-enter short here. On this time frame. So we go back down to the 2-minute time frame, because I know a lot of you have standard accounts. So the last trade you could have taken, actually you could have put that short on there, but you see it would have taken it out on the open. So our 58 candle is there, so we can't trade now. This is the 8 o'clock candle, the opening candle. It's still in our direction, isn't it? See, the test of the low of the day has been done as well already. But on the completion of this candle, I'm happy to go short at 802 unless something changes significantly. So here's the 802 candle, which is just closed. So I'm happy to take a short position now. Let's change the color on that. So let me put that. I put that there. So I'm happy to have taken a short here. Remember, that's our short position. Just change the color of that. So that's our green for the 2-minute trader to go short. Again, our stop loss here on this 2-minute chart would be sort of back up here at this key where our stop loss was before. We could have had a 15-minute trend line if you want it to be aggressive, but you can see how aggressive these moves can be. So I'd initially started round about here, the sort of the height of the wicks, which is where the 2-minute. So my stop loss is up here at 24,388 initially to open the trade. So that's my entry. My stop loss, let's mark that as well for you. Obviously, we're doing this. I'm doing this very slowly just to explain what's going on. So that's my stop loss on the momentum of the open. That red doesn't come up very red, has it? Let's make it pink. Can you see that one? So there's a stop loss initially. Our entries down here at the blue chart. So obviously it looks like a massive bit of risk or a massive stop loss area. So 24,388. We got in at 24,361. So it's 20 points on the DAX. You see how the spread's quite hefty here on the opening trades. There's lots of people competing for direction. And remember, this is the 50-hour moving average. Remember this blue line here, 50-hour moving average, 24,350. So we'll see how that one pans out. Let's just leave that one to run. Let's go to see how the Forex market has opened. So I'm going to go different layout. Oh, that's the same layout, isn't it? Yeah. That's the hourly chart. So if we look at the euro and dollar this morning on this with this setup, so hourly chart again, we've been short. It's rejecting the 50-hour moving average from open last night. This is the 10 o'clock candle last night, and down we went. So we've been. This is still short. Sorry, not still short, but it is short. It's got shorter if you like. Our low point on Friday took us down to in fact there's this on Friday took us down to 1683, so that's a downside target for many. 1683 for euro today. Not a great deal of data coming today, but that's our downside target on the hourly chart. So again, you could draw on a trend line. The trend line's down. I mean, obviously set it up how you like to set it up. What I normally do is, mark the highs and the lows of the pre-market session, as I'm sure many of you have seen before. So there's that low from Friday. The 5-minute chart's already short here. You can see the let's reset that. There we are. You can see the breach of the 50-hour. That was really the first trade there at 5 o'clock. It's gone against. It's stopped you out. It's gone green. Gone short again. Stopped you out. Gone green. That's a positive. That's the most positive entry there at 16.10. Size of the body of the candle. Remember, all of these things still count regardless of candle pattern. Even those are ATR candles. But it's significant. As you can see, it's a big bodied candle. It's the biggest bodied candle of the session since sort of 2 o'clock. See that one there? That's the next biggest one, isn't it? And then the other two were negative as well. We had a positive couple there, but that's a big one. That would have been I would have added to an entry there at 117.17. So that would have been a key entry point following this break here, and that was the first break on the 50. Bought back. Next down, losing trade. So 2 losing trades here, although we'd been long there. Certainly long from short. Sorry, I should say from this point here. Alt J, I should put it in there. So short there. Stop loss up at the 50 period, and again could have got out there as it's gone green if you want to be strictly conservative. But then again, red there. 2. Not sure what was going to happen here because we were going sideways. We're at 17.15, but there's another big down candle would have added to my short if I'd closed out or re-entered short here at 7.10. So that's normally when I'm sort of starting to look at the markets. That's when the big European traders are all at their desks, 7 o'clock. Well, certainly before that in London, 7 o'clock. It's 8 o'clock, remember, in Frankfurt. So the Europe and Amsterdam and Paris. So those traders would have been in earlier and added to that. And again, if you're trading into the open, that's quite an aggressive one there at 15 minutes before. If you still want to do that on there, you could have got out on the green again here and then re-entered on. That you would have re-entered on that one because that's big enough. We've taken a new low, added again there potentially. The aggressive traders will have done trying to fish out the buyers. We're starting to see some buyers now, but obviously we now got the opening of the cash session. Obviously there isn't an opening of the forex markets, but it's still influenced by what's going on in the stock markets in London and Frankfurt and the rest of the key European trading centres. But we're moving down. So the first attempt at this low, the 1683 area from again remember where we saw that. If we just quickly jump up to the 4-hour time frame, so oops, now you can see that there, can't you? Hopefully, there's that. There's that hour that delay from the second at 2 o'clock. So again, we saw it in the hourly chart, didn't we? So that's our target there. That's 4 o'clock candle from the 2nd of October. is the next downside target at 1683. We're currently trading around and understandably holding at the big psychological 1700, which is where the hourly candle on this one actually finished. If we flip out of Heikin Ashi candles here, guys, to normal candles, you'll see the subtle difference you get with Heikin Ashi. You can see there's still a negative down candle, but the wick, you can see it's stuck right on 1700 on the close of the candle. But interestingly, the the 7 o'clock candle, which is just completed here in London, has actually pushed a new low from the second. So we are now looking at new lows for euro dollar from the second. Obviously, if we go below this, there's a 1668 area marked here. Was that I can't remember why that was marked in brown of all colours. What colour I use normally, but it's on there. It's on there for a reason. I don't think why it's there. It should have obviously a bit lower. That's 1650. That's 1650, isn't it? Is where we got to, and that's a much more significant number. So 1650 was the low that we got to before the end of September, before we recovered into the end of the month, around about that 1700, back to the 1700 handle. So we are under 1700 down. Remember, 117 for euros been an area we've been pivoting around, but to say that would have been short here. If we go back to our 5-minute trading time frame, short. Big shot there, and then perhaps closed out straight away as it's gone to green. Interesting, with no up wick, so that's looks like we've put the floor in 1692, so just under 117 again. So clearly buyers around the 117 for euro dollar. So see if we can get back over the 50 period. That'll be our next upside target. So that's shorts. We're closed here. That one would, if we'd gone short on that big one there, which I probably would have done, to be honest, at 1745 because of the size of the candle. There's a little bit of a wick here. There's a little bit of a wick there to perhaps just keep things not too aggressive. In fact, that one's let me move that one. Yeah, it's not a massive one. That one is not small, not massive here, but clearly that's quite significant that there's no wick to the upside on this one. Small bodied candle. Bigger body candles coming, but still not as big as the negative one. So it still might be just a little bounce from the short. But anyway, those shorts are being closed out now, and would have turned long on that candle there. You can see that one. I don't know if I can zoom that up anymore. Maybe I can I? No. So certainly long on that one at 8 euro. Euro dollar. So those shorts were successful. The last two were not, but that would have been an entry there on that time frame. Let's get rid of some of these, so I'm losing out of. Doesn't like me having. I'm mad at the moment. Trade locker on this demo site. I hope the live one's better. So that's now long euro. Let's go back to the DAX. It was on the other setup, wasn't it? That DAX. This one, wasn't it? Oh, it's kept my line. Oh, it hasn't kept them. Lost them all. Oh, dearie me. Never mind. So let's just go back to where we were. We were short, weren't we? And we were being taken out. Look at this. This is our move down. This is the normal candles. Remember, if we go back to the Heikin Ashi candles, you see the depth. So there was that low tested at 23, 24. 335, and now it's turned long. So that short probably would have been a losing trade as it's turned around. Now that's the 8 o'clock, but we're still, it's still buys to the downside. We're under the 50 period, but it's not the move. It's not the significant move we've seen. I mean, lots of action and funds and equity would have been gobbled up this morning on as we said earlier, on Bitcoin, on the yen in particular, the Nikkei, and Japanese bonds, the JGBs. So if we have a look at the Nikkei 48,142, it's just closing, I would guess. If we just go up to the the hourly chart, we see the huge jump we got. Yeah, and again, this is the beauty of Heikin Ashi candles. Smooths everything out. It fills the gaps. Remember what we saw before with the normal candlesticks? Let me just demonstrate. This is a good example of the power of Heikin Ashi. No gaps. You don't get any gaps. You get candles opening up in the middle part of the previous range. See how that candle's open there, which is the middle of this range. That candle's open there, the middle of this previous candle. So very, you see the smoothness. It takes out all the noise. If we go back to normal candlesticks, it's a great day for demonstrating the beauty of Heikin Ashi candles. From a graphic point of view, if nothing else. So if we just go back to normal candles, you see the gap there on open. Heikin Ashi doesn't give you a gap because of the calculation it uses. It gives you the average of the previous two bars. So it uses previous sessions, highs and lows, as well as averages. So it's an average bar. That's what Heikin Ashi means. So these are normal candles. You see the gap there. And the gap people like it. So, the gap traders will be looking at, is this a breakaway gap? It certainly looks like it from the sheer size of it, and why it's happened. It's policy wise. But again, gap traders will be watching these gaps interestingly. So the gap. 47,295, so call it 48,300 from Friday's close at 46,000, so quite a significant 1,000-point gap. Obviously, can't ride spreads on the Nikkei, but gap traders further on in the week will be watching that motion. But I say, as far as Heikin Ashi candles are concerned, we don't get that because of the calculation, and it's exaggerating not exaggerating, it's compounding visually the significance of the move on open with a huge bodied candle in the first 2 hours of trading. And then we followed through, didn't we, through the morning, trading through into the close of Tokyo. Tokyo will be is Tokyo closed now, the actual cash? I think it might be. It's Matic itself. Yeah, it closed up 2,175 points, up 4.75%. So the Nikkei is up 4.75 today. Lots of the other Asian markets have closed. The Hang Seng is still open, but it's down 0.65 of 1%. And FTSE is flat, and the DAX, as we've just seen, is also flat, but open and running. So Nikkei, huge move today. One of its best moves for many years, 4.75%. See any headlines how that runs, but certainly a big move for the Nikkei today. Excuse me, I'm just open some news feeds. I'm on my internet connection isn't great today, so I'm in a different location again today. So just bear with me if things are ticking out, but we've actually been okay. So there we go. Where are we? We're at 17 minutes past. Let's go back to the DAX, which is the one we were trading on this 5-minute time frame. So the hourly still remains down. So we're still biased to the downside on the higher time frames, but our opening. So we were short. I think we probably would had losing trades there, wouldn't we? We were short, and the volatility of the open has whipsawed us and taken us out. So just on a candle point of view, as I said, that turned long as we saw with the euro also turning long, but we're capped at the 50 period moving now. So again, the limitations of Heikin Ashi candles on the short term as we chop around the volatility it's demonstrated there. So if we just go back to our normal candlesticks and see if we can, I'm not sure I'm going to be able to bring up, this is supposed to be the Bollinger Band and the stock chart. Let me just see if I can add the Bollinger Bands and see what the stochastic setup would have done for us. So there's the no, it's not going to let me, I don't think. If I take off the 50, yeah. And if we add stochastic stocks, number -5 and stochastic, stick it at the bottom. But my setup is not for 14.1.3, which is up there. Setup, my settings are 10, 6, and 3. So we have K at 10, smoothing at 10 at 6, and see what this would have done for us. So that would have been, where are we? So we'd have touched the outside. We're looking to go long here. So that would have gone long there. Again, that's we're losing one today. So we haven't had a losing it. So that would have been long at 10-2. Would have been Leslie. See the rules. Remember, we're looking for a cross of a touch of the outside of the Bollinger Band, and then a cross of the stochastics. So if we go back to the last touch of the outside, it was here. We were looking to go short, so that would have been gone short there, and it's crossed there. So earlier in the morning, without the volatility of the open, that had gone short there. Can you see that there at 540? Stop loss would have been up above here, somewhere up above the top of the Bollinger Band because of the wick on that one. Can you see the wick on? This would have been a successful one. That would have been the short there where it's crossed. They've moved together but not gone above. Nice move. So target 1. So we'd have got in. Trying to just do the paintbrush. So we'd have got in there and we'd have got out target 1 there. That would have been our first. And then target 2 would have been down here. But it's not happened. It's gone again. Then we've crossed again. So we'd have got out there as that's crossed there. So that's target. There's target 1, and that would have been target 2 there. So that would have been a winning 2-part trade. Then we've gone up to the Bollinger Band, but we haven't touched the outside. So we haven't had another cross. We've had another cross of the Heikin Ashi, but we haven't had a cross of the. We haven't had a touch of the Bollinger Band. Here, we come all the way to 725. We touch the outside of the Bollinger Band, so we're looking to go long. That doesn't happen until that point there. So that's a long position there. See how we've crossed above. We did move over, but our stop loss would have been down here, and that would have been stopped out. So that would have been so that's a losing trade. But we did cross again. Sorry, we've touched the. We've then. So that's taken us out. We've then touched the outside of the Bollinger Band again on the open here, the volatility of the open, and we're still moving up. So we would have gone long, ironically, as we've closed out. So that would have stopped us out, but we'd have also gone long there. And we are now, and target 1 is there. So that would have been a successful DAX trade on the 5 minutes with this Bollinger Band is stochastic cross. It's a mean reverting strategy, so it's more appropriate than Heikin Ashi candles for trading the open. So that's now still long. Having got in here, got to target 1, and my stop loss now would be above entry here, and it would be round about the bottom of that volatility of that 815 wick. Can you see that? So my stop loss would be there now. Change the color. So that's my current stop loss, if you like. The colour's not distinctive enough, is it? Look at dark now. Can you see that? So that's my stop loss there now from an entry here. So we've made that one, and we've at least made that bit there as well with this strategy. But there we go. We're looking for a touch up here of the outside of the Bollinger Band. This may come down. So that's successful, loser, successful, half successful. We're still open. Okay, so this is a much more appropriate strategy, mean reverting for trading the open. So we'll see where we go. But as you can see, we're struggling. Next resistance is there. So I may just managing this manually. We may get to that level there, 24,417, 21,417. We may not as well, of course, before we get to the outside the Bollinger Band, or we may reverse again like we did before but watching these for a crossing, for a cross or a move. You can see how the ATR still on here, so you can see the the movement of the candles improves as the volume comes in, as open comes along. So there we are. So a positive start with that strategy. Now the Heiken Ashi ones didn't work out for us this morning, did it? But that's the. I'm not if I'm going to sit out. It's probably not going to keep all of those because it doesn't like the drawings, does it? We go back to. Oh dear, I shouldn't have done that because we've lost it. Let me go back to the other layout. Sorry, and have a look at what that looks like for the other. Oh well, we've lost it just as I said. But anyway, you get my point. We're looking for the outside of the Bollinger Band, aren't we, for a next target, or even that area there, that 24,416 for the second half of that trade. Let's look at the euro. Dollar yen actually is probably more significant, more interesting today. Interesting, it's come back a bit. The yen since the high of 630 at our time, 630, 640 at 150.40. So 150.40. Wonder where we were last up here. Let's put that line in. So that's the big. Oops, I've got the. What the line I'm doing? So that 140, 150.40 is where we got to this morning, didn't we? Let's just have a look on the weekly chart when we were last up here. It's a long time ago. So 150. In fact, we did spike to it in July. So go down the daily time frame and zoom in. So we were there actually as well. We did get to 150 in July. I didn't think we'd got over 150. Perhaps we did. My mistake. So there we are, the 31st of July, and the before the big sell following the surprise non-farm payrolls on the 1st of August. On the third, so on the Thursday, and indeed the Friday before non-farm payrolls, we were actually over 150 again. But so that's we ran to that this morning. Then you see the gap there with these normal candlesticks. And then people have thank you very much. If you've been long from Friday or even long today, you've had a really good run selling the yen. And some buys have came in at 150, understandably, but not immediately at 150 because 150 is all the way down here. That's where we've come back to. They've let it run for an hour or two, and then the Asian session has closed out their profit for the day, and the Europeans have taken over and either closed some of their earlier long positions and it's not taken off the board. So back to 150, but it's a significant, obviously, move against the yen this morning across the board. Let's just finish up elsewhere. So what the European start's been like for the other metal, for the other assets we look at significantly. So 3,900 has held for gold in the European Open this morning. So again, another one. Be very, very careful trying to catch the top of the gold market. The break of the 20-day moving average here on the 1 hour chart was the beginning of the third, and we haven't looked back. So again, consecutive days higher for the gold market continues as that's the second, the down day we had, and then Friday was up, and Monday is up quite strongly, quite a strong candle at the moment, nearly as big as that one from the 29th at the moment, moving positively. So as I say, try and short that at your peril. As we were saying last week, the 20-day moving average is moving to 3,700, and last week's moves has dragged it up quite significantly towards 3,750. That's a significant move. When the turn comes, it could be quite dramatic, but at the moment, stay on your surfboards, my friends. Gold remains bid for all sorts of reasons, but the strong stock market, strong gold market, it's counterintuitive, but don't trade your intuition Trade the strategies, trade the mechanics is what I always say. Try and fight your intuition all the time. But alternative assets like crypto have seen a big bid, and here we have, as I said earlier, 125,000 new all-time high for Bitcoin yesterday, and we're holding it again today to 123,750. So strong day for alternate assets. So the story is really the weak yen, strong gold, strong Bitcoin, dollar. A bit of strength this morning. We didn't because of the move. It's seen against the yen in particular. So if we look at the euro here, sort of sideways action on the hourly. Sorry, it's the daily, isn't it? Sorry. The stronger dollar against the yen has helped it against the euro as well. So we have plummeted, as we saw earlier on the 5-minute chart, to 16.90 under 117, but we're back to just over 117, so 10 pips under, 10 pips over. And the bottom of the Bollinger Band sits right on 117 at the moment for the euro. The other major European currency this side of the Atlantic is sterling, and again, dollar bid on the weakness, the ripple effect through against the yen. So we were down here on open last night. We got as low as 134.24. And we are back to 134.50. We're back over. We're just sort of having a go at trying to get back over that at the moment for sterling. So 134.50. That's a key resistance area. As you can see there on the hourly chart, see those pivot areas. So a breach of that we could take back to test Friday's high. This holds, we go back down to test the lows through here. But obviously, eyes now look forward to the American session or the US session this afternoon. Obviously, a quiet Monday, quiet Tuesday this week. But the overriding thing tends to be politics. We've had the big political shock out of Japan. We've got movement in Hamas and Israel peace situation or potential peace situation. We've obviously got the shutdown in America. The blame game is very much underway. Trump pulling all sorts of other stunts in other cities. Chicago, he's moved in the National Guard. He's moved in the National Guard against the I think it was Ohio as well. But if we just look at the major events of this week, it's a relatively quiet week. Let's bring in our calendar, and obviously the US economic events take with a pinch of salt. I say it's a major holiday week in many parts of Asia this week. I say Asia, major this week. So China, as I said, closed all day today. South Korea, Thanksgiving weekend, closed this week as well, most of this week. So say quiet Monday. Watch for Miss Lagarde's speech later on this afternoon. Bailey's also got a speech. I wonder if they're the same place. Looks like they could be. I don't know. To be honest, I don't follow that. Particularly Mr. Lane in half an hour. He's the chief economist at the ECB. And the Deputy Governor, Digon, has also had something to say about an hour or so ago. So DAX, as we saw, and FTSE little changed into the open. No 3 candle big events for tomorrow, Tuesday. I've got a little webinar on. I can't remember what the title is tomorrow, but I've got a webinar, an actual training webinar tomorrow. So join me 2 o'clock tomorrow. I might have a look at the US Open tomorrow as well during that webinar. So join me from 2 o'clock my time. That's 1 o'clock Universal Standard Time tomorrow. GMT. Remember the clocks go back for the winter time here in the Northern Hemisphere in the UK at the end of the month, so significant month, October, obviously start of the 4th quarter. And next week obviously sees the start of the earnings season as well, but more on that obviously next week as we get close to it. Key policy. Dove, Miss Bowman, really wanted to cut rates, but she didn't vote for it last time. See what she's got to say tomorrow, potentially. Private oil inventories. I didn't mention oil, did we? We had the OPEC meeting over the weekend where oil is, we didn't actually show you oil, did I? Oil has jumped significantly on the rather conservative outlook from OPEC about rate production increases. Many were expecting Saudi Arabia to get its own way to increase production by 300, 400, even 500,000 barrels a day. The OPEC actually settled, which interestingly was a proposal from the Russians. Obviously, they're not part of OPEC, but the OPEC Plus result was they've kept production at previous levels from September, 173,000 barrels a day, and that was a bit nuanced as far as the market was concerned. They were expecting Saudi Arabia, with its thirst for market share on price, but obviously the other producers have got a bit twitchy with this. The WTI here getting under to $60, Brent coming down to $65 in this. Sorry, it's the hourly chart. Let's put the daily chart up to the decline we've seen in such significant decline we've seen in the last week or so in the oil market. It's the Brent, the global benchmark, and so on Thursday we went down to 64.50 on the expectations that OPEC partly was looking. Obviously, the big inventory changes as well in the US hasn't helped. Looking to sort of increase production over previous agreements, but they didn't over the weekend, which I say has been a major surprise. So we've had a big couple of 3% leap in Brent over the course of the open trades this morning, and we got back to $66 for Brent at one point, and WTI went back to over the key $62. So we're back into the bottom of that channel. Remember, we were talking about the bottom of the channel at 62, the top of 65 for WTI. Not something I was particularly interested in trading, apart from this. As we mentioned, the big down day we saw there on the 29th, we did take on a different trading platform, so we'd been short, but that would have might have even stopped out my short. I'll have to go and check that this morning, but certainly we sort of successful trade, even if the stop loss had got quite tight. I think it might have done. Actually, I think I may have got it at 62, and would have taken it out today. But anyway. So the summary of the morning's trade is the massive move we've seen in the Nikkei. So the cash Nikkei market is up 4.75% today. Let's just get rid of the Nikkei. It's a big move, and obviously our derivative market continues to move. There's the big gap up. We look at the hourly time frame. What a big move we've seen for the Nikkei today. So 4.75 gain into close for the Nikkei. The move in oil, gold through 3,900, and a big old surge for the JGBs as well in Japan. So it's all been Japan dominated, and the yen big moves here. So very significant moves for a Monday. The most exciting Monday we've had for a while, my friends. As I say, for the rest of the week, relatively quiet today and tomorrow. But check those central bankers. They sometimes have a throwaway remark that scares the market. So Neil Kashkari, quite a major speaker. Bostic, also centralist, but obviously more on the hawkish side now. And see what Michelle Bowman has to say. On Tuesday. Wednesday brings us the expected 25 basis points cut from the RBNZ overnight, some industrial production data out of Germany, and the official oil inventories. I think they are still going ahead despite the US they may not, but certainly the API should. The American Petroleum Institute, that's not a government institute, but the official EIA inventories may still go ahead on Wednesday. Thursday, also the Fed minutes I think are still scheduled to be released as well. Again, we'll be live for that if that is still the case. I'll double check that. I'll update you all tomorrow. Thursday's weekly claims obviously won't be there. There will be more speeches from members of the Fed on Thursday. Powell is due to speak as well. I think that's still going ahead despite the government shutdown. But so the weekly claims won't happen. The EIA claim oil inventories on Wednesday won't happen either. I don't know. I'm saying that they may happen. And the PMI data now is actually scheduled for Friday. So so somehow some members have recalibrated, but that uh, I'm going to say the likelihood of this leaking ahead of time is quite significant, given that it's a week late. Okay, that's all I'm going to say. So be careful if you're trying to trade non-farm payroll on Friday, given this delay with federal shutdown. We've had this in the past, so just bear that in mind, friends. If you've not traded non-farm payroll during a US government shutdown, we'll see. Maybe we might be back by Friday. A week is a long time for the government to be shut down. I think it was 18 days last time. I'll have to again, don't quote me on that. I'll have to double check. I was just trying to remember. Yeah, we'll see what happens. But certainly, Canadian jobs will certainly be out on Friday. Looney's been under lots of pressure, and the University of Michigan data will come out as well as normal. Because obviously they're not federal workers, although obviously the University of Michigan has significant federal funding, but that data will come out on Friday as well. So take care, everyone. If there's no questions, I'll wrap this up and go and get some breakfast. I've been here for over an hour, blethering on. So hope you've had a successful start to the day, a successful start to the week. If you were long the Nikkei for any reason over the weekend, well done. If you've been trying to short the yen today, unfortunately, you've called that wrong. If you've been long the yen, long the dollar, you've done well. Sorry, short the yen, you've had a good morning, and again, trend following traders. We just followed the rules and stayed on the right side of markets. So I'll leave you with let's leave you with gold, because it's everyone's favorite asset, isn't it? I think that's the case. If you want to come and trade with us, do. You want to try us out if you're an experienced prop trade. We are as good as the next guys, a bit smaller than many, but growing significantly. It's our first year, 12 months in business this month in October. We've got lots of exciting things coming in October. So stay safe, my friends. I'll see you all tomorrow, and let's have a good second week of October. All the best, everyone. Bye-bye.